Hi guys, Sandra Baptist here, and I'm gonna talk to you a bit about decoding the balance sheet. Um, First of all, I'm gonna talk about your complete financial statements, what those have, but today we're gonna dive just a little deeper into the balance sheet. So a complete set of financial statements are gonna include your balance sheet, or you may see it as your statement of financial position. It's going to include your income statement, or you can call it your profit and loss statement, or it can be called your P&L statement, or recently, it's being called the statement of comprehensive income or statement of comprehensive loss. So don't get confused with the terms. um, the different terms come down, with auditors and accountants are trying to appease the end user and trying to have the end user understand what are in the statement. So they keep changing the terms. So don't be confused. So I just mentioned two reports, right? But they're all different names. So balance sheet or statement of financial position, um, income statement, or profit and loss statement, or P&L statement, or statement of comprehensive income, as if you made a profit, or statement of comprehensive loss, as if you made a loss for the year. So don't be confused with the terms. Everything, all the terms point to just those two reports. And the third report is the statement of cash flows, right? They haven't changed that because it's just a statement of cash flows. You also have the retained earnings, or the accumulated statement of retained earnings, or the statement of accumulated deficit. And as we go through this series, I am going to delve in and I'm going to show you what these things look like so you can understand. So those are the 3 or 4 main reports that you should have received from your auditor or from your accountant, right? Do not accept any report without your statement of cash flows. And in the Financial Management Academy, I go into how the cash flows are created, and how it ties the two main statements together. So do not accept any statements or any reports from your accountant without the statement of cash flow. This is very important. Okay, so we're going to talk a bit about the balance sheet. And again, in the academy, in the course, the core course in the academy, I talk about how the balance sheet is created, what is included in the balance sheet, the different line items that are in the balance sheet. So I really break down how the balance sheet is created. I show you how we created a balance sheet from scratch. From just simple transactions, we built out the balance sheet. But you as the business owner, if you're a business owner or if you are part of a team supporting a business, so you could be an accounts team, you could be an accounts manager, it's also important that you know what package you're looking for, what should be included in the package, how these reports are built. And it's a top-down approach and also a bottom-up approach. So I explained both ways in the academy. We don't have much time on this video, but I'm gonna, try and chunk it down so you can try and understand. But first of all, if you have any questions, just post them below and I can get back to you. Please like my YouTube channel. I am trying to grow the YouTube channel and trying to get this information out there. And also hit the subscription, hit the notifications, so you can know when I drop some more videos. Okay, So now we're going to talk about the balance sheet. I thought I had my notes here somewhere. So we're going to talk about the balance sheet, and the balance sheet is, let me just give you a broad definition. The balance sheet is a statement that shows you the value of the company at a particular point in time. The important thing about the balance sheet is that it is at a particular point in time. So you can have a balance sheet at 12 o'clock on May 21st, 2023, and you can have a different balance sheet at May 21st, 2023 at 1 minute after your first balance sheet has been pulled, depending on how active your company is, depending on how many transactions go through. So think about a supermarket, right? There's always traffic going through. So if I was the CEO of a supermarket, I wanted to see what my balance sheet looked like at 12 o'clock. I get my accounts department to pull the balance sheet from the system, and I look and see, okay, this is what my balance sheet looks at 12 o'clock. At 12:30, I'm going to go to my accounts department and say, pull my balance sheet again, because the balance sheet is going to change from time to time, but it shows you the balances of the assets, the balances of the liabilities, and the balances of the equity at a particular point in time. So it will change from minute to minute, maybe second to second, depending on how busy your business is, or it may change from month to month, week to week, etc. So the balance sheet shows you what you own, you as the business owner, what you own and what you owe. And the difference between those two is your shareholders or owners' equity. Okay. Balance sheet shows you what you own, which are called assets, and what you owe, which are called liabilities. And the difference between those two numbers, those two figures, is your shareholders or owners' equity. That's how much equity you have in the business or not, right? So the balance sheet has three main sections: the assets, liabilities, and equity. And within the assets, you can have current assets and non-current assets. Within the liabilities, you can have current liabilities and non-current liabilities. And then you have the equity. What are current liabilities and current assets? What is all this jargon? So current liabilities are, let me talk about current assets first. Current assets are all those assets that you have, you can liquefy. Oh, liquefy, that's a good word. That you can liquidate. Liquefy. Current assets are those assets that you can liquidate within a year. Non-current assets are those assets that would take more than a year to liquidate, right? Current liabilities, the same thing. Current liabilities are those liabilities, those bills and payments that you owe within a year's period, that are due within the year. Non-current liabilities are those payments that you owe. It could be a 5-year loan, a 3-year loan. But those non-current liabilities are those things that you owe that are due after 12 months, after a year, right? So imagine, I want you guys to get in the habit of looking at balance sheets. You really should have an accounting system set up, whether it's QuickBooks or Xero, QuickBooks Pro, QuickBooks Online, whatever it is. Ask your accountant to pull that for you so you know how it looks. And you will see the three main categories that I talked about. Okay, so that is what your balance sheet is. And I would like, again, to join us. I would like for you to join us in the Financial Management Academy. If you go to financialmanagementacademy.com, the link is all over this page, in the bio below this video. And because I really get into really in depth in building the balance sheet and showing you how the P&L is done, etc. Today, I just wanted to talk to you a little about the balance sheet and what it comprises of. Okay, so I'll talk to you again soon, and take care. Have a great day. Bye.